Hello, everyone. Welcome back to another trade recap, the 2nd of March 2026, Monday. So today we actually had a very beautiful setup. I have to work on some of my executions, clearly. Price action was very iffy to anticipate with because over the weekend there were news about Iran and some other macroeconomic events, so I wouldn't be surprised if a lot of you or other traders took the day off or was extra cautious going into the Monday here. I'm gonna go over the live recording recap and explain my thought process as I was going, so we can all learn and grow from it, and kind of like a journal diary for me to look back on. Okay, without further ado, let's continue and start. Welcome to a beautiful Monday morning. We started off with MNQ and the other indices, YM and ES, taking off in the morning here. All three of them going straight up. So just looking through the charts here, I have also a 15-minute split chart up above me, which doesn't show in the recording. But on the 1-minute chart, you can see here MES is just pushing and it's just pushing. It broke through the pre-market high right here, the pre-market high level, and basically started going. So again, straight up, EMAs curled. We have bullish momentum up, obviously. You don't need EMAs to tell you this is going up at this point. The 50-minute chart, it came down. This was the pre-market high, that sell-off here, and then now it's breaking through. So going to this, I'm thinking, okay, so we clearly have a breakthrough up above here after the gap down, after the Iran news and so on. So we could be looking for longs, but at this point, we could close the 50-minute below the pre-market high and go all the way down. We've seen that happen. So it'll sweep the level and then continue down. We've seen this happen in previous sessions. So at this point, I'm kind of waiting. At here, I'm thinking, okay, well, actually, this is a good entry point because we have a good break. We retested it. There's a 1-minute FVG, very tiny, not the best. But it's going up. So here's the thing. Let me pause it right here. So here's one of the things I'm thinking, right, especially in hindsight. Based on macroeconomic events, I was also a little cautious, right? The setup in itself, the technicals on the setup is that the 50-minute, 15-minute broke through pre-market high. The 1-minute came back to retest it, but the 15-minute did not close, which, again, if you see my last video, you'll see why the 15-minute close is very important, because we don't want to get a sweep and reversal on here. So during the trade itself, I was thinking that possibly this is a long setup, but the more I see it, it's like, you know what, it's not the best long setup. This FVG is not big enough. There's not enough displacement. It looks like a beautiful break and then retest, and now it's going up, but really continue focusing on the 15-minute and wait for the 15-minute close to then get a entry here. So that's what I'm exercising. So it's a battle for sure, because now I'm seeing it go up. I'm like, yeah, this is a beautiful retest, inverted hammer, and it's kind of going up. But then another part of me is like, we've seen this literally last session and it just went down, and our target is basically overnight high from a previous session up, right? So see, and it's going down now, so possibly retest this area again, or possibly double topping, slicing down. Very volatile. 15-minute, the first 15-minute did not close, so it's always good to stay out of the 15-minute. But I do eventually end up entering a trade trying to see TPs, viable TPs. So up at the top here, you see the previous day close, the PDC gap, right? The dotted line. That's always a really good draw on liquidity. Price likes to rebalance itself back to reach for the prior day closing gap. So that was basically the setup. So what I was seeing here on entry is it broke the high, showing good momentum. Here is a retest, inverted hammer, and going up. The 50-minute closed strongly above pre-market high. PT is beautiful, prior day gap. And another good side is the overnight high was not taken yet. right? This level. So I'm anticipating it's gonna go and take this level. It's heading for this level. Now there's two important thoughts in my head right now. When you trade supply and demand, your entire edge is based off of supply and demand. Meaning at supply you short, markets tend to go down and sell off at supply, and in demand, markets tend to bounce. Obviously, you can have inverted supply and demand when you eventually break out of a supply area like you did on the pre-market high zone right here. It comes back and uses it as demand, right? So it inverts and vice versa for the other side. So the issue I had with this is that I was going long straight, and you see my entry, it's straight at my supply zone. So this is basically a complete, how I would say, against my edge, right? You don't ever want to long at supply. And I'm saying this through experience and through technical and common sense, right? You don't ever really want to long ride at supply, because right now market could react and one candle can slice right through and stop me out. The other good points were, okay, it's moving, the gap is there, 50 minutes strong, 50-minute close. We can definitely have a push to overnight high, this liquidity level right here. And that's the thing. What I was thinking here, I was fairly confident because it's delivering off of the retest, the 1 minute FVG, that we're gonna tap this overnight high. But the problem is I didn't know that nobody really knows, but I was anticipating there's a high chance that once it taps overnight high, it's gonna slice me down, right? It's probably gonna retrace again. I don't know if it retraces all the way back down to pre-market high or not, or completely reverse, but to assume like it's gonna go straight ballistic was a little bit of wishful thinking, and I knew that. But at this point, since I'm already in the trade, what I can do now is I'm on full risk mitigation mode, which is making me emotionally very jittery on trying to take profits and trying to cut losers. Like I'm very, very tense on this trade, as you will see. As the markets play out, see it kind of comes down, and again, doji right here, very bad sign. Doji at a supply is almost a death sentence, but we still get it. It wasn't the best execution. I really don't consider this a good trade, to be honest. But I'm thinking, well, we have overnight high. It has to at least hit that before we see a reaction. The problem is it could be a very fast reaction, and the risk to reward at that point isn't right. Like, look at what I'm risking. If the next liquidity target is my target, it's a negative risk to reward. So now we just tap overnight high, and now you'll start seeing, like, I'm thinking, close it out or what, and it's coming down, going up. Very, very emotional stuff right here. So at this point, I'm thinking, yeah, well, if it's doing this right now, there's a high chance we're coming back down, and I don't want to get stopped out. And I don't know where it's going to retrace to until it tries to go for the gap close up there, if it ever even does. So I tighten my risk. I see this and I tighten it immediately. I'm like, no, I'm not doing this. And boom, there you go. Right there, I would have been stopped out. $200 risk, right? That happened so fast. So let's go back. Let's go back to learn what happened. Longing at supply. Don't ever do that. Just wait for the break. Okay? Wait for the break. Wait for the reaction. Oh, but it's gonna go in my liquidity target. At this point, this trade was basically a fight between a good entry versus liquidity target point. I know with a high conviction that overnight high will be hit before anything happens, but at the same time, if that's the case, still getting long here was a bad idea. It's like, oh, I know it's gonna go up, but you're risking a lot more than it's gonna go up, right? And you don't know if it taps this and goes all the way back down, right? This could be a reversal area, right? Maybe it never hits the gap, or maybe it goes all the way down, chops around, and later on in the session before day close, it fills the gap. If you have high conviction on gap plays. So that was the conflict here. If anything, I probably should have just longed it down here, but even then you understood my points of why this is not the best, because the 50-minute did not close and blah, blah, blah. All in all, the analysis, post-market analysis, is that ES did not give me a good trade either way. Okay, one of them was before the first 50-minute closed. The other one was the next viable liquidity target was too close for my entry, and it could have reversed, which it did, right? It immediately would have tapped me out if I didn't tighten my risk, taking a full $200 hit. Okay, so again, very volatile. At this point, it's no man's land. It is at the 13 EMA, so it can be bouncing here, or it could test the 48 down here. So at this point, I'm just watching. I'm like, all right, whatever. I'm glad I tightened my risk right before it snapped. So I took a $80 risk on that one, $80 loss on that one. And as of right now, like I don't see a good viability on going up here. I don't really have a good entry. So right now I'm also looking up on my other screen to see what all the other indices are doing, YM and NQ. And we're just watching price action. Because it's very important not to jump into another position, because I know a lot of people would have seen this candle and be like, let's go up, and now you're getting sliced through. And then people would have seen this doji and sell off and would have gone short, right? It's very important after a loss, you kind of really breathe and let the market play out a little bit. Be happy if you did take the loss, be happy that was a loss you were willing to take and you took it, and that's just part of business. Or you tighten your loss, right, like me, right at the nick of time, and be happy with what you get. So price action wise, the 13 EMA is definitely supporting it, and it seems like it's going back for the second round here. So over here, I'm kind of going over my head, like, you know, what would have been the other setup? How could I have taken this setup properly? Could I have entered back there instead of hesitating on it? But that hesitation was good. It was aligned with my system, and I have to teach myself money doesn't mean success. You have to follow your system, right? Because I've taken, literally last session, I've taken pre 15-minute close, exactly like similar to this, and then down. And look at this sell-off. Look at this huge candle sell-off, right? Again at the supply zone. So, and then huge buy up. Like who's winning and who's selling off? So on YM I see a good position. So on YM, I set up my trade. I already got in. I know it was very fast, but here's my explanation on this. So 50-minute closed above, right? Kind of a weak close, but it came down. It came down forming a flag. It's being supported by the EMAs, and it's at a good sized fair value gap, right? That's what I was saying. And as it's pushing off this fair value gap and breaking out of the overnight high zone again, that's where I took the trade. I wanted to enter on the candle that broke out the second time on this level. Risk right below it. And then my risk, my profit target was this gap here. And we're gonna just see how this plays out. I did risk a little more here. Instead of 200, I think it was 333 or whatever it came up to. So here you can see me drawing the flag breakout. And I'm just basically watching price action. On this trade, the emotion going through was, oh man, I don't want to take another loss, right? Especially when it's moving and now it comes down, like, oh, what if it snaps me through? So I tighten up my risk. At this point, I don't ever want to see this price come back down here. If price comes all the way back down here, I will not have confidence in this position. So I don't even want to see it come down here. That will invalidate my trade. And that's basically what a stop loss is. Stop loss isn't how much money do I want to lose. It's more like, where will the market have to come for me to be like, nah, this trade's not going to work. And here you can see me kind of increasing my SL here. I don't want to take a L anymore here, but it's very close to my gap, so I just close it out. If I stop here and show you the chart afterwards, you see that it hits and it played out. So moral of the story is continue good habits, 50-minute close, continue building confidence, and really what I was struggling with on the second trade was sitting through with the trade and just target the next PT, profit target, right? The next liquidity target, whether that be the gap or the next overnight high or previous session. It's very hard to think that the market's just going to go straight ballistic and like smash through 3 liquidity targets all at once. It can happen 100%, but oftentimes it doesn't. And one next candle will rip your stop loss out of place. So that was the thought pattern going through my head this trading, and came out pretty good. Came out with 499. So close, could have been 500, but hey, it is what it is. And that was done. 2, and I'm done keeping my risk $200-300 level. I am following with my trading rules, waiting for the 15 minutes to close, waiting for the market to show me what it wants to do instead of feeling rushed. And yeah, just keeping it going. 2 trades and that's done. I'm tightening down on my trade frequency as well. With that said, if you like, please subscribe and like it. Leave a comment. Maybe we all learn a thing or two. Other than that, take care and trade safe. And I hope you guys have a profitable month.